Hey traders, it's Peter again. Today's Monday, August 4th. I thought I'd take a quick look this evening at what the market did earlier today. Here's the Nasdaq 100. It certainly did what we were hoping it would. It bounced all the way up to the lower boundary of the specified bounce zone, which is 50 to 61.8% of wave A of Z. Now, most people would probably be measuring the retracement zone starting at the July 24th high, when in fact you should measure it relative to the last down leg, which started on July 30th. Okay, we are retracing relative to that last down leg, not the entire decline that started on the 24th. So now we did book profit right at the exact moment this afternoon. We exited exactly at 39.22, and now we're going to see whether the market still has momentum to resume its relief rally up to the 61.8% retracement of wave A of Z. Now let's take a look at the Nasdaq 100 on this 10-minute chart. Let's go back to July 24th, the day the Nasdaq 100 made its top, and let's review what's gone on since. The first installment of this ongoing correction was an ABC zigzag labeled Wave W, with Wave B unfolding as a contracting triangle. And then a brief relief bounce labeled Wave X tested the underside of the yellow line, this yellow line being the extension of the lower left side of the diamond. Then from here, we got the second installment of the correction, another ABC, with Wave B attempting but failing to break above the yellow line. I labeled this Wave Y. Under most circumstances, a double zigzag, like we got here, would bring a correction to an end. So it wasn't surprising to me to see that the next bounce, the relief bounce, which now is labeled Wave X, was this deep, because the odds favored uptrend continuation to new highs from this point. But this wasn't to be. Notice the left shoulder, the head, and the right shoulder that formed a rounding top. The next day we gapped down, reached the end point of wave C of Y, briefly bounced, and then came down and broke it to confirm the downward continuation, meaning the moment we broke below wave C of Y, we knew then that this double zigzag was destined to become a triple zigzag. We knew once the endpoint of wave Y was breached to the downside that this overall Elliott wave formation was destined to become a triple zigzag. Now, under Elliott wave guidelines, there's no such thing as a quadruple zigzag. Therefore, we are expecting this third zigzag to be the final. Zigzag 1, relief rally. Zigzag 2, a deeper relief rally. And then zigzag number 3. Now, if you notice, last Friday's low tested the upper boundary of the support area highlighted on the daily chart. And the first sign that a bounce was underway was this relief bounce, this impulsive move to the underside of the 50-period moving average on this 10-minute chart. And then a pennant formed. When this pennant formed, we decided to go long. We went long somewhere here. We identified the pennant. And in hindsight, we could have really waited, because today we retested that pennant, we filled the gap before moving higher. All right, so what is next? First, notice that today's high hit the 50% retracement level right on its head. Now, my retracement levels are relative to this wave A. I'm not measuring my retracements relative to the start of the correction on July 24th. Why? Because this overall correction consists of 3 zigzags. This third wave B is reclaiming a Fibonacci portion of this preceding wave A. Therefore, wave B could potentially extend further up to the 61.8% retracement, which, by the way, coincides with the rim of this rounding top, or a cup if you want to call it that, okay, meaning the endpoint of wave Y is in close proximity to the 61.8% retracement and the yellow line. So I believe that there's enough momentum to carry this bounce further up to this area. And then once wave B is confirmed, it's going to give way to wave C of Z, which should bring this overall correction to an end. So assuming wave B will extend further up and reach the zone of the 61.8% retracement, what will come next? Most probably wave C of Z will get underway. Now notice that I said the zone of the 61.8% retracement. Wave B might run out of steam upon coming in contact with the yellow line, or maybe this horizontal gray line which I drew across the endpoint of wave Y. So anywhere here would constitute a retest of that Crab's PRZ we talked about in last night's video, 39.36, 39.38. That's the ideal turning point. Now, assuming this plays out, again, as I'm envisioning, what would be the downside in wave C of Z? How far down can it go? My best effort estimate is based on the fact that the most common relationship among waves A and C in a zigzag is equality. So let's reverse engineer this thing. Let's measure the size of wave A and project it from this area. Anywhere inside this green line, and you get approximately, 3801 to 3804. Close enough for government work. Finally, the weekly chart of the Nasdaq 100. I think I can give you one more reason to expect 3803, give or take a couple of points, to mark the end of the current pullback. In last night's video, I took you all the way back to early June 2012, the point from where I believe a 5-wave advance got underway. It started with wave 1 and then wave 2, which retraced 88.6% of wave 1 before setting the stage for a 68-week-long wave 3 that didn't end until early March 2014. From there, wave 4 came down to retest this double bottom here, consisting of the early February 2014 and mid-December 2013 lows. This left behind a right-angled ascending broadening formation and got the final wave 5 underway. I dubbed 2013 the year of the third wave because every pullback was an opportunity to get long. That playbook never failed. But it certainly didn't apply consistently during 2014. The year got off to a weak start because in late 2013, price finally reached the red trend line for the first time since 2011. In last night's video, I took you back 3 or 4 years to the April 2010 high preceding the flash crash. We drew a line across that high and the February 2011 high preceding the various events that took place in 2011, most notably the summer 2011 swoon. Price continued on higher, never once threatening the red trend line until late December 2013. And that's precisely why 2014 got off to a weak start. Once the index reached the red trend line, it struggled with it for a few weeks, and with no one left to buy, the index came down to retest the mid-December 2013, and then it resumed higher into early March before turning back down into mid-May to retest this double bottom. What's the point of all this? Simply speaking, at the start of 2014, Black Wave 3 was already on its last breath. Now compare January 2014 to January 2013. In January 2013, the index was nowhere near the red trend line, unlike in January 2014. What is it that you remember the most about January 2014? This sell-off, this late January sell-off that lasted into early February 2014. That was a fourth wave. And then what followed was a rally into early March 2014. That was red wave 5 to end Black Wave 3 to usher in the start of Black Wave 4. So looking back, the first half of 2014 largely consisted of fourth and fifth waves. Okay? Not until mid-May 2014 that the 2013 playbook started working again, because we got a new trend in wave 5. That's why. And that ended when? In late July. And now I've zoomed in on the area of interest to show you how I've counted these subdivisions of Black Wave 5 so far. Starting with Blue Wave 1, we got the pullback in Blue Wave 2, which retraced exactly 61.8% of Blue Wave 1. And then Blue Wave 3 got underway, and had it not been for the top of the yellow channel, Wave 3 was a handful of points away from achieving the perfect size of 2.618 times the size of Wave 1. Now, in previous charts during this video, I made the case for why I believe 3803 will mark the end of this current pullback. Now, Wave 2 retraced 61.8% of Wave 1. That's a deep retracement. Now I'm expecting a relatively shallow retracement in Wave 4. And the perfect retracement in this case would be 38.2%. With Wave 4 retracing 38.2%, we have the opportunity to get back on the long side and ride the final rally towards the top of the yellow channel to end both Blue Wave 5 and Black Wave 5. Somewhere from here, I expect a deep correction to begin towards the black fourth wave.